What's happening, all? It is the 29th of December. This is where it all ends. The last day of the month, last day of the quarter, last day of the year for us to get everything done we wanted to get done. 2023 will be in the books for as far as business at the end of business today. So I want to go over what the last year has brought us. So first, a little bit of education is what we're going to get into. Probably share with you something that we've talked about, stuff that I have shown, but never really defined, I think, well enough. So what we're going to do today, we're going to do a little bit of Bond Chart 101. And we're going to provide a little bit more of an intro into the mortgage-backed securities and how you can read these charts. So let's understand what the mortgage-backed security is, right? It is a financial instrument that represents ownership in a pool of mortgage loans. These pools consist of thousands of individual mortgages, and their cash flows are divided into various securities, unique with each characteristic of various different risk levels as far as how that loan is written and what the level of risk it is and where it gets sold into, basically. Now, that's a generalized way of explaining it. If you want to understand a little bit more, go to The Big Short. Go watch that movie. Amazing movie. Gives you a lot of details. Don't have the kids in the room. A lot of language, unless your kids are into that kind of thing or use that kind of thing. Now, the candlestick charts here that I'm showing you, they're a visual representation of price movements in this market in any specific period. We can reach, this is right now, I'm showing you the last 12 months. This is 2023 right here. And each one of these represents a day's worth of trading in 2023, basically. Now, you're not going to see 365 trading days because there's not 365 trading days. This represents the actual trading days that are being referenced here. And then if you want, you can get it down to minutes and hours. You can see minute by minute how things are moving. So what we try to do is look at this from this particular level and see what the trends are. Now, there's something in here referred to as, well, we use these patterns that we're going to see here. You see how we outline these patterns, and they're going to use different levels that would be support or resistance. Fibonacci levels, those are retracement levels that are horizontal lines drawn on these candlestick charts. They're key Fibonacci ratios: 32.8%, 50%, and 61.8%. That's indicating potential levels of support and resistance. These levels are derived from the Fibonacci sequence, which is a mathematical sequence in which each number is the sum of the two preceding ones. By identifying these levels, they can, traders can gauge the potential of a market turning, going one direction or the other, and when these patterns, or at least when these prices could go the opposite direction, but they have been going. So they use these as kind of like an indicator of sorts as to when they should put in a buy order or a sell order. Now, stochastics, which we have down here, they are a momentum indicator. They're used to measure the speed and magnitude of price movements in this market. They consist of two lines, the percentage of K and percentage of D. They plotted on this subchart down here, and which usually just goes right below this candlestick chart. That's where you're going to typically see it. Sometimes they put it above it. It depends upon what view line you prefer. Now, they fluctuate between 0 and 100. You see this 100 here and this 0 way down here. Now, what happens is when you get in between 20 and 80, that's normal movement. Anything above that or below that, so you get below 20, that's considered an oversold position. Over 80 is an overbought position. So it would say in momentum-wise, it could turn around and go back to the direction. Now, what we see here, look at this. Every time we've gotten overbought, it's not long and it goes where it sells off to get back to an oversold position. Then the buy goes in. So these momentum start to crank in here. This year, we haven't seen something go as long as we've seen right here. I'll get to that in a minute. Now, let's get into the ceilings and the floors within the MBS market. Just as their name suggests, there's a ceiling where it's going to top out. There's a floor where things bottom out. Now, floors represent where it's going to struggle to get below that price, where people, traders may not sell beyond that, may start buying at that point. And ceilings would be where there's a psychological barrier here that they more than likely everybody's going to sell here, so they will start to sell. This is mostly, it seems to be very, very psychological, very emotional in this part of the market. So let's take a look at the chart we have right here in front of us. So we're showing all the way from the beginning of 2020, this is January 2023, all the way to here. Get back into October. I'm going to have to actually move my chart down. The very bottom of the market, the very ugliest day in the market as far as, well, it's actually a good day. It was towards the bottom started, but it came back up October 23rd. So we had seen from January all the way at October 23rd, nothing but downward movement all the way. And then bam, we get to that point, that turnaround point, this overbought position shown here that just started a bull run, which is probably one of the craziest bull runs I've seen. So from October 23rd all the way to today, that is December 29th. So 2 months of a bull run on here. And in that 2 months, we have maintained overbought positions from the 2nd of November. So we broke into that same, actually the 1st of November, we broke past, the 20 to 80% here. They were talking about normal market movement, again, the overbought position. We maintained that overbought position for that entire period of time, 1st November all the way to the 29th of December, 2 months. Think about that. 2 months is overbought. We don't see that anywhere else here. We see here March to somewhere it did bounce back down into it, but conventionally back into regular trading. See here, it was March 15th to April 5th. Here we're seeing it in January 6th, really back into it, stayed into it, and January 25th, so 20 days. We're not seeing that hold as long as it's holding here. Very, very interesting. We're seeing that hold the way that it is, and it just keeps going up. But here's what I also find very, very interesting. I've talked about this barrier. I don't know of anybody else talking about this barrier, this 100.53, that price point, par 53. That right there represents the date that they announced quantitative easing. That was back in 2008. I'm going to go ahead and zoom out on this particular chart so you can see this. So we go all the way back here. This is the date that they announced it, right here. Let me see here. Where is it? Right in there. Okay, right there. It's not going to represent the exact day. This shows November 17th because I'm looking at November 24th. Shows a big wide chart here. If you zoomed all the way in, day by day, we did 1 day charts or 1 month charts. You see is November 25th, and that announcement was made. Also, I'm representing here with this 102.53 is the closing, the day they started quantitative easing, which was January 1st of 2009. Actually, January 2nd, 2009 is when they started quantitative easing. So that's where all this was here, all that federal involvement, putting capital into the markets all the way through here. So here's my synopsis for this year. Okay, so we had where they decided quantitative tightening, everything shoved all the way down. They started more or less properly reporting jobs is where this real turnaround started to happen. There wasn't a lot of the BS news going out there that we were seeing previous to that. They were making changes to it after it was released. So they release it, headline, affect the market. Then they would adapt it later. Say, oh, there's a revision, and that goes on the back of the market. The market's already adjusted to the headline when it was the new headline. Now we see today. We run up here, hardcore bull market, hit this ceiling, bounce off it. Go back down to this floor, come back up, hit the ceiling, bounce off it. Hit the ceiling, bounce off of it. Go past the ceiling, next day, down, can't break it. Today, hitting it again. I'm guessing that this is going to be a pretty formidable ceiling. My personal thought. I'm not hearing anybody else talk about it. I'm not hearing anybody else flag that particular thing. This is just something I'm coming up with. I could be completely wrong. Now, I don't want to be wrong in this. 2 reasons. We hate people, right? Secondly, if rates get too much better, what are we going to see the prices of houses? Think about that. Look at what we have right now. Even though October was the first time that we saw really any turnaround in the market, you just go ahead and just look up home prices. It talks about October prices, the biggest gain of 2023. We saw that same thing coming. It's probably might be the biggest December. I don't know. Might have the biggest November when that information comes out. But record high Octobers. We just saw what October did. October turned around. It just turned everything around. It stopped the bleeding that we had been seeing. It was the worst rate that we had seen in a very, very long time. So let's go back to these charts again. So it turned around October 22nd, when that was. Everything turned around October 23rd. So really only a handful of days that we had really positive trading, but it was one of the highest, the biggest gain in 2023 was October. Guys, we're probably going to see some bigger gains here. And if the rates keep going down, we're going to see more price increases. I'm going to tell you, lock in what you can now. What we've talked about with other opportunities that are out there. Call me for more opportunities to lock in some great positions right now, because if the rates do get better, if the Fed starts dropping the rates next year, we're going to see your prices go through the roof. And it is, look around. I'm not the only guy saying it anymore. The hedge funds are doing their damnedest to take over. They are buying a shit ton. I saw something. I gotta find out for certain if it's true. I'm actually pulling it up right now on my Instagram. I know this is going long, and I'm sorry that it's going long, but I'm looking right here at this indicating. You see here, it was somewhere stated that 40% of all single-family homes, 44% of all single-family homes were purchased by private equity firms in 2023. 44%. I don't know if that's right. I'm going to do some digging. I'll bring that up next time. But if that's the truth, if you're sitting on your ass, it's time to get up, time to get moving. 2024 is when you better start expanding your real estate investment portfolio, because if you don't, somebody else will, and you're going to be left in the cold. So call us, let us help you get started. Got a lot of things out there that's going to really, really, really rattle your cage and get you started if you just get on the phone with me. That's all I'm asking. 602-291-3357. Text me. We'll set up your call. Have a happy new year.